Joining me now is Potomac Wealth Advisors founder and president, Mark Avallone. Mark, good to see you. Thanks for being here. And of course, this oil shock seems to be spreading across Asia. Factories cutting output, fuel shortages beginning to emerge, all what Dan Yergin told us on this program a week and a half ago. Your reaction and advice to investors this morning who may want to buy stocks?
Well, good morning. And it's difficult to buy stocks when there's such great uncertainty beyond anyone's control. You know, how to invest during a war where, you know, a majority of the world's trade is disrupted. That's really not in any business school pamphlet. It's best to sit through this, see where we get some clarity. Of course, investors want to get ahead of the news. I don't blame them. But right now, we're far from a certain outcome. I think your comments earlier about how this is impacting Japan as well as the Asian markets, overseas economies are so much more dependent on imported oil, on imported energy. They're not independent energy as we are here. And that's why you've seen since the start of this war, the U.S. outperforming the world. And if you recall, when 2026 started, overseas investing was all the rage, and it had outperformed in January or February. Well, that has dramatically reversed, and we don't expect that reversal to change. So we would be staying at home. We would be investing more in America. The corporate earnings reports look strong so far. So if you have to put money to work, I would stay in a domestic allocation.
Your thoughts, Mark? Hard assets, you in?
Well, yeah, and they're attractive. The challenge for portfolio managers is if they're at 5% now, what do? Move to 6, 7, 8%. You still got to invest 90% of your money somewhere else. Okay. So you still are ultimately looking at stocks and bonds. On the bond side, we would stay short duration. This could be inflationary. Look, even if we get some favorable news, by the time oil flows again and the products get shipped through the Strait of Hormuz, we're going to have a spike in inflation. It's going to cause the Fed to be on hold. We want to stay short duration, short interest rate risk, keep that money safe. And in terms of stock investing, blue chip American companies, tech has held up surprisingly well. Some of the better companies have done well. I think you have to be selective. So I think that you're going to almost see a safety trade in U.S. technology, U.S. defense stocks, things that'll persevere through time like that.
Hearing is set. It's obviously going to be in the Senate Banking Committee. The hearing is on April 16th, we're told, as his nomination to lead the Federal Reserve is moving forward. But the process is unfolding alongside this ongoing probe into Chairman Jay Powell. It's a criminal probe. Republican Senator Tom Tillis claims he's going to dig in. He's not going to support the nomination until this investigation is dropped. Mark, your thoughts on that with Kevin Warsh ready to go, but Jay Powell making those comments in the last meeting. Well, maybe I'll stay around. Maybe I'll be on the board. Maybe I won't leave until this probe is dropped. Your thoughts?
Well, I think Kevin Warsh will be a breath of fresh air for the market, but I think Liz also makes some good points. Look, we've had some crises in the past 20 years, whether it was the '08 bank failure, the European bank scare, and then we had COVID. And in each case, the Fed basically bailed out the market, plunged rates down, stocks were stimulative. This is not going to be a Fed-induced recovery. Lower rates is not going to lower oil prices. It's not going to give us global stability. So it's almost much less for a change. Who's at the Fed chair is less important than global geopolitical events.
All right, we will be watching all of that. Mark, good to see you. Thank you, sir. Mark Avallone.